Welcome to Market Day Report. It's the day after. If you missed what happened yesterday, we picked up some, few reports from USDA. One of those, the World Ag Supply Demand Estimates report. We had a crop production report in there. We had winter wheat seedings report in. Anyway, it was enough that the market took a dive. Look at the corn market today. This is, again, the day after, and the March contract, 4.20 3/4, down 3/4 of a cent. This is what it looks like on the chart. It's the 6-month chart, and you see a lot of choppy action in there, right? Well, here's the 1 month. That tells it a little bit better, that cliff over there on the far right side. And again, this is the intraday, but we're missing what happened yesterday prior to that. But that's what's been happening since that report came out on the March corn contract. What about soybeans? Well, soybeans went lower yesterday on the very bearish report for corn and soybeans, with the March 1043.5 down 5.5. Let's hit on wheat before we get to our next guest. Wheat market is lower. This is old crop and new crop, exception there, September contract. Hard red is lower across the board. Let's touch on spring wheat. It's higher, and the cotton market has been higher as well. Our guest is Chris Swift. Chris is with Swift Trading in studio with us, and it was kind of like watching not quite a historic event, but maybe a big football game.
It was. It changed a lot. But let's look back just a little bit and why we have so many acres. The increase of ethanol. When the mandates for ethanol came out, 2007, 2008, farmers tore down fence rows, they plowed up pastures, they put every piece of ground back into production that they possibly could in anticipation of the ethanol taking off and becoming greater than 10%. Now, here we are 20 years later, 18 years later, and we're still at 10% ethanol, some 15. We have some automotives that will run off of the E85, but we don't have anything like what the amount of vehicles that electricity did. They had built companies to build electrical cars for that fuel source, but nobody did that for ethanol. None of the major manufacturers did anything for ethanol, so we just got stuck with all these huge acres, and every now and then we get a drought, and it runs it back up to 7 or 8, but the majority of the time we spend under $5 a bushel. So I don't know how we get rid of some of these acres, but we either have to do one of two things. We have to increase demand from ethanol, because that's what created the increased acres, or we're going to have to cut some of those acres and do away with ethanol. One of the two. So,
which now has me wondering, okay, if the U.S. does that, because 18 years ago we didn't have the
oil production.
And we also didn't have so many others in the market.
That's right.
Brazil, China, Argentina. Mm-hmm. So if the U.S. pulls back, will others follow suit?
Probably not. No, I wouldn't say so. But we have to do something. And barring just a really, groundbreaking drought of some kind of the other, which doesn't look very good. We've got rain forecasted up in the dry areas up north right now. Argentina and Brazil are fixing to harvest the largest soybean and corn crops in history right now. So we're going to have to do something. I don't know what it is, but if not, the price is probably going to continue to go down. And we talked about this a couple of weeks ago, the elephant in the room. There's no demand out there. Now we're finding out we've got additional supply and still no more demand.
And I actually talked, and I'm going to get us to the finish line here, talked to a cotton producer last week who said, I'm finished. I'm putting grass back in. Mm-hmm. And has given up on the dry land cotton side of it, just said, I can't see this getting better for me. Mm-hmm. So I'm putting this back into grass. I'm going to do something different. Sure. I just wonder if that may be an option for others.
It's possible, yes. It may be forced. We don't know. But I do know that some of that wheat pasture is going back into pastures again. Cattle seem to be about the only thing right now that's making any money for people. And Boy, is it volatile.
Well, speaking of that, let's take a break and we'll come back and pick the conversation up with Chris Swift, Swift Trading. Glad you're with us this morning. This is Market Day Report. It's Market Day Report. We've got Chris Swift with us. Chris, we were talking about the WSDA report and everything that came out yesterday. There's something else that's happening. This in the beef industry involving choice and select.
Right.
This is kind of interesting, right?
It is, and I think for the first time, it could have happened before in the past, but I think it's the first time select ever traded over choice. And so now there's no need for a choice. And of course, we produce so little of it that it's going to be an interesting for our in food service producers, things like that, to see how they handle that.
So is some of that, as we're going through live and feeder cattle, we're higher across the board on both. Is this also related to supply and demand, if you will?
Oh, sure, absolutely. And of course, what we're trying to do is ration the number of cattle to keep beef production elevated so we don't have to raise the beef price much more to kill consumer demand. So absolutely it is. And what we're doing is we're feeding cattle longer. And we have the old expression when you're talking about how much corn and sorghum we've got, and cheap feed has a tendency to make cheap cattle because we feed them more and more and more to try to gain them more weight, try to get more pounds, because that's how we sell them, is by the pound.
You know, we had prime, choice, select, and years ago there was something below that. We don't see that really in grocery stores anymore. Are we hitting a point where we really just need to be prime and choice?
Well, and even prime, there is some market for that, but it's a pretty small market out there. But the choice, we just probably not going to see a time frame that we're going to go backwards. That's what I don't think is a time frame where we'll go backwards on it. The genetics alone, and now that we're supplying a lot of those genetics to the dairy herd, it's going to be very difficult to go backwards in quality of production.
Okay, and finally here, as we head out, again, we talked about the cheap feed. Makes cheap what?
Makes cheap cattle.
Is that a projection maybe down the road? Are we about to start seeing a pullback, you think?
We're already seeing it. The futures market is right now in a very inverted. We've got the highest prices right up front, and they tail off all the way back down. And it's interesting because we got the feeder cattle index up again today at 369.24, only $7.27 from an all-time historical high. And then on the board, August, 353.27. So we're backwards $13 right there alone just to the August contract.
Okay. Chris, always enjoy this.
Absolutely.
I love the opportunity to just pick your brain and ask screwball questions along the way.
Well, screwball answers.
Chris Swift is with Swift Trading.
I mean, it really is great. I feel like you guys can go like another hour or so. And how much, I mean, you're on the phone so much. How much are you hearing as far as the Mexico border? Obviously, that is a big play in what we're seeing right now. Any chance of that opening? Either of you guys, are you hearing anything in that regard?
Not that I know of. I don't think there's anything to it. And remember, when it does reopen now, it has been so long that processing and production capacity has increased down there to suffice those animals for as long as they need all the way up to slaughter. So even if it does open now, it's very unlikely that you'll see all of those animals start back into the import
Different
process.
world now, isn't
Absolutely.
it? Absolutely. Great stuff, both of you. Thank you so much.